Everyone, welcome to Tuesday. I hope you've had a great Anzac weekend and were able to enjoy the long break. Right, today we are going to take a look, obviously, at the main board for the New Zealand Stock Exchange and see how that's performed over the past week. Now, just remember that this is for educational purposes only, definitely not intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. I've had a few questions of late too, just before I share my screen, where people are wanting to know how is a good way to start, how do you pick stocks, all of these sorts of things. Well, if you come across to my website, I have actually put together a really simple course on basically how to get started in investing. It talks about things like managed funds, it talks about what the asset classes are, things like cash, bonds, shares, that sort of thing. So if you're interested in that, it's a 5-part series. You're welcome to jump in and take a look, and hopefully that will get you started. And if you've got any questions, let me know. Right, let's take a look at the New Zealand main board. Here we go. Here's the NZSX 50 up on the screen, and you can see that last week was another down week. If I zoom in, you can see there wasn't a lot of volume. There was about 109 million, so a little bit less than the week before. The positive, if you like, for that little last candle is the significant wick at the top. That means that even though it was down, there are still a lot of buyers out there. So that is encouraging for our market. However, as we can see there, the bears, if you like, the sellers did take control again last week. So we need to keep an eye on this and actually see what really is happening. Let's go and have a look at the 1-year chart and see what that's telling us. The first 3 days of last week were positive, which was really good. Obviously, people started getting a little bit nervous, and we saw Thursday, Friday have a bit of a sell-off. So that is what drove the market down, obviously, is that nervousness. Interestingly enough, if you look at the likes of the Australian market and the US market, they are actually having really good performance. And in fact, the US has had another all-time high. But it's certainly not flowing through to our market. Let's go back to that 5-year chart and just see. I've already got the ATR up here on the screen, and that gives me, it's the average true range. So it helps me understand what sort of volatility there is in the market. And it looks like it's sort of come off a little bit, but we'll just take that figure and divide that by where the indices is currently trading at the moment. And that will give us roughly that, like I said, volatility. So we're looking at about 2.17% volatility. So that is not a lot for an indices like this. If it gets up over 5% volatility, then I definitely want to stay out. But hey, we've got 2 negative weeks in a row. So again, I'm staying out of the market. Let's go and put these moving averages on and just see what they're telling us. So we'll pop on the 30 exponential, and here we are here. The market is still trading below that 30-day moving average. And if I zoom in, it looks like it could be starting to head down, which is a little bit of a concern. But we'll just put on our 15-week moving average as well, just to gain further clarification on that. And here we go here. They have obviously crossed at around the end of March this year, and the market's certainly trading below both of those. So when you see the faster period moving average cross through the slower period moving average and it's heading down, and the share market or share is trading below both of those, that's a time just to sit on the sidelines and just wait and see. If you're already holding positions, that's okay. It's fine to hold those positions, but just make sure that you've got either a stop loss in place or you know where your exit point is going to be. Hey, there are some shares that do perform quite strongly when you're getting an overall market going down like this, but you do need to protect your capital, which is really important. Let's have a look at the 1 year again and just see what that is telling us. And yes, you can see here that to the downside, the 15-day moving average crossed on about the week starting the 9th of March, and thereafter it has continued to trade down. Whilst the shares did briefly trade above both of those moving averages for about 3 days, again in early April, it's certainly trading down. It's not looking like those moving averages are going to be crossing to the upside soon. So that again is a warning sign. So we've had the caution, if you like, told to us on the weekly chart. Then when we go and look at the daily chart, it's actually confirmed that now is definitely time to be staying out of the market. I'll just go back to the 5-year chart. And really, you can see here by that dashed line, that's where the market has closed for Friday. And it's sitting basically back around where it was, 5 years ago, nearly 5 years ago. So this is why stops, in my view, are very important, because it can wipe out 5 years of growth, as we're just sort of seeing at the moment. So yeah, just heed with caution. I'll just stop sharing. Obviously, there is still a lot of uncertainty out there. Protect yourself, protect your investments by using stops. I talk about them all the time. Certainly no opportunities at the moment in the New Zealand share market, but hey, that will change. There's a saying that I really like. It's times like these to remember that there's always been times like these. Now, come back on Thursday. We're going to take a look at a Smart Investor share. It's the American one. It's ticker code USF, and we'll just see how that is going. And remember, though, if you do have anything you want to know about the share market, or if there's any questions that you're unsure about, reach out. Also, let me know if there is a share you would like me to review to help you on your investing journey. So until Thursday, take care.